Are there benefits? Sure. And they state them. They're manufacturing work, steel demand, and engineering contracts, refinery activity, long-term pipeline operations. Who owns it now? So, Mike, I'm having my coffee the other day.
Yeah.
And I'm reading this article, and it's about foreign investors who have bought Canadian government debt at a record pace in April. So, there's a lag between reporting on all this stuff. So purchasing 46.9 foreign billion in Canadian securities overall, which kind of caught my eye. And I thought,
what was that number again?
Well, this is total security. So this is everything, right?
Yeah.
But these are foreign investors coming in. But the thing that really caught my eye was that the Government of Canada bonds now have an ownership stake of 43% by non-resident Canadians.
That's a really, really high number.
Right. So, and welcome to the show. I just jumped in, but and everyone, welcome to the show.
Thank you so much.
True Patriot Loves. Very happy to have everyone watching today. But this one's a really interesting one because right away, when I see something like 43% of bonds are owned by non-residents, my mind asks, and this is my accounting brain, it says, well, what are the total amount of Government of Canada bonds?
What do we have out there?
So we now have $1.48 trillion. Now, this needs to be updated, but that was the end.
$1.5 trillion in...
Coming into 26, we had $1.48 trillion of government bonds. So, those Government of Canada bonds we used to buy. Remember when we were kids?
Oh, yeah.
Yeah, we all had bonds.
Yeah.
Our parents, learned the bond market, would buy a bond.
It seemed to be like the bond market was primarily owned by Canadians.
Right. Well, we did, right?
Yeah.
We all bought, and for some reason, I don't know why, that went away.
Yeah, it did.
So, you don't say to your kids anymore, get a government bond. But, there were Canadian savings bonds. We all used to buy them. They had a low interest rate. But it's kind of how you entered the investment world to learn a little about the market, right? So time went on. These started to get bought up by foreign investors. So if you have let's say 1.5 billion now. It's a little over 1.5 trillion.
Trillion, yeah.
Right? 43% of that is now in the hands of foreign investors.
So roughly $600 billion is held by foreign investors.
In Canada, yes.
Almost half of the bond investment is held by foreign entities.
Right. So governments go out when they need money. They go out and borrow money in the marketplace. So half of it, or 43% of it, is now owned by U.S., Asian, German, other countries, and also other investment arms in other countries.
How do we work these bonds? Like, do we have to say, okay, here is a national project specifically?
No.
No.
We go get a bond rating for so we basically say Canada has a bond rating of like AAA. Therefore, this is a good bond. It's a safe place to do business, which I find very interesting, given the fact that our debt in the country is about $1.27 trillion.
So we're already underwater with what we have out there in bonds.
Right. Well, and we're the third. I took a look. So then my mind goes and says, okay, are there any other countries that have foreign ownership higher than us? And there's only two others, which not a good example, is France and Germany. So we're the third. So our 43% is like the third highest saturation or content of foreign ownership of government bonds. So then I thought, okay, how do I feel about that? So I started looking into it.
Kind of feels like we've lost a huge chunk of our financial sovereignty to ownership in other countries. Probably primarily the U.S.
Yeah, a lot of it is they seem to be the April. So in April, Government of Canada bonds out of the total investment in securities accounted for $27.7 billion. So they bought a lot of bonds. So someone or some people, they don't say specifically who, they tell you the countries that buy them or the places of the companies that buy them, where they're from. But roughly, it was a record coming in, and most of them are from the U.S. and Asia.
So, is there a limit that we will allow? Is there, I mean, at 50% foreign investment, we stop it. Is there any place or any indication that we would do that?
No, we don't seem to have a, no one's, there's not a law or a guardrail
There's
or
no,
anything.
there's no mechanism to.
No, no. We do say, this is the interesting part, and I've always heard this, but I've never tested the theory on it. They say, well, Canada, the foreign countries and companies from foreign countries like the bonds because we have a high bond rating,
Okay.
a AAA bond rating. We're a safe place to do business. We have stability.
Really, even though we have 1.3 trillion in debt and 1.5 trillion in bonds out there, we seem like a good bet, huh?
Yeah, I'm with you. We always make the case that we have a low debt ratio. But, we don't talk about how our productivity levels are low. We don't talk about our GDP per capita. We don't talk about, quite frankly, that we have, which I find interesting. We are going on what we're talking about, a technical recession, but yet at the same time, our bonds are attractive.
That's I don't understand how that aligns. That's kind of where I was going with this. Now, okay, here's my other question.
Yeah.
If we aren't on a growth pattern and the US is exceeding, if their bond yield is exceeding ours, do we not then have to go to the marketplace with a better value, with more interest for investors? Do we not then have to enter with a more attractive product to the market? And if so, how can we afford to do that? Because doesn't that then lean on all the projects that we're going to use the money for?
Yeah, exactly. Well, it's interesting because, our defense projects. So we've got some big projects coming up. So infrastructure, defense, housing, productivity initiatives that we put in our budget. So what we're going to the market and we're saying, please come in and finance these.
Essentially, that's exactly what it feels like. The timing on it is exact.
Yeah.
Yeah.
Yeah. And that's what we're doing. So we're basically going to market. We're bringing in foreign. Now, the issue becomes, what happens if, and no one talks about it, what happens if there's a downturn in the market? So you can't take care of these bonds.
Right.
So you have to renegotiate the bonds. You have to come up with other arrangements.
I suppose that could happen. It is a financial arrangement.
Well,
and
yeah,
you've got
sure.
these investors there. If the bonds start to fail,
the security is the government.
Right.
And the people. So we elect the government. The government goes out and creates the policies. They've told us in a budget they want to do infrastructure, defense, and housing. Now they've gone to market. And now all these firms. Now, this is interesting because we just did a show on Kuzma, Mike.
Mm-hmm.
So we're actually going to have a negotiation with a country that is now buying up a substantial amount of our bonds on the market to get into those sectors. It seems odd, doesn't it?
Yeah, that we're negotiating on one page on one day, and over here selling investment in these very same things that we're. Well, it's interesting that you say that, because one of the things that crossed my mind just now was, okay, so now we've got this much in bonds out there at 1.5 trillion. Does the arrangement now change with, in the face of tariffs that we saw this morning?
Mm-hmm.
Trump jetting right over Kuzma and adding Trump's tax or the tariff of 25% in a lot of cases, an additional 10%. How does that affect our bond rating, and how does that affect our ability to service the bonds?
Yeah.
It's got to have an impact.
So in other words, of course it does, right? So if you can't reach an agreement, the market goes soft. You can almost create your own outcome because you have. Now, the other thing that
he gets to write his own script on that one because we need bailed out, essentially.
The other one we talked about, which is the vulnerability. Say the AI bubble busts and he's got to actually pull his money back.
Yeah.
Because he's loaning the money, right? He's actually giving the money, buying the bonds. He's got to say, okay, I'm now going to either pay the penalty or the bonds come due. I'm going to take them out. I'm going to take them back because I need the money back at home. We're vulnerable to that because we've taken the foreign investment. Whatever's happening in their world now impacts our world.
And as they
we get dragged along.
And as they exit this bond, even though they're paying a penalty, we're going to be, I'm just guessing, and please tell me if I'm wrong, we're going to be borrowing from Paul to pay Peter.
Yes.
And in that buyout scenario, it's going to be a further drain on the bond, the revenue brought in, or the capital brought in by the bond will be offsetting the exit of the U.S.
Yes. Yes. Now it's interesting, Mike, because I'm going to go on a tangent for a minute, because this is even crazier when you think about it, or even more interesting. Coming into the
It's okay to say crazier. Sometimes it's crazier.
No, it is crazier. But coming into the show, they announced, which I thought was interesting. Danielle Smith and Doug Ford announced the Northern Shield Energy Corridor, which is 3,300 kilometers of pipeline for crude oil running from Alberta to Sarnia.
Right.
So I guess oil coming across to be refined.
3,500 plus kilometers, I'm guessing.
3,300.
Wow.
Yeah, 3,300.
That's a long pipeline, man.
Yeah, and it's interesting. It will transport 500,000 barrels per day, with the expansion going up to 800,000.
That's a lot.
A lot of barrels.
Yeah.
So now they go through it, they make the announcement. And listen, I'm all for these projects. I've said on previous shows, I'm all for these projects. And I'm all for investing in our own minerals, refining our own minerals, taking them to market, creating profit centers. But the interesting thing now, as we do this, they're saying, okay, well, this is either a private-public partnership or just a public partner, a government-funded
I saw
project.
them do the announcement today. There's no private partner associated as of yet?
As of yet.
Okay.
Right? Now, we're going to talk about the West Coast pipeline in a minute, which is very interesting. But yeah, this one's so now, are there benefits? Sure. And they state them. They're manufacturing work, steel demand, and engineering contracts, refinery activity, long-term pipeline operations. Who owns it now? So this is the interesting thing. So if we're at the point where we're going to use public money for projects like this that are revenue generating, then are we, and I brought it up on previous shows, are we in a Petro-Canada scenario again?
Mm-hmm.
Like, are we in a scenario where the oil coming across is co-shared between Alberta and Ontario for the citizens who are actually going to foot the bill for the project and the pipeline?
It's an interesting proposition, because you think to yourself, okay, these projects will get built, but they have to show some sort of payback that goes directly into the government pocket toward these bonds. Otherwise, we're just going to spend the money and mount more bond debt and more debt overall as a country.
Exactly. So why would we, resource-rich country, and we're going to actually pull the oil out, we're going to ship it across to Sarnia, refine it in Sarnia, sell it, I don't know, to the U.S.
It's a great question.
Sell it to, it looks like we're going to sell it inside Ontario. Okay, where does the profit go? And if the profit's going, I agree with you. And so this one's the big question for me. And it's interesting, because on the West Coast pipeline, so this is the one now that came out on the 2nd of July, Danielle Smith and Prime Minister Carney came out and said they need $35 to $43 billion to build a pipeline across to Roberts Bank from Northeast Edmonton.
Okay, yeah,
right?
Yeah.
So this is,
this is essentially this is a southern version of what we're doing here in Ontario with Alberta.
Yes. So they remember we looked at the three pathways that they were considering at a previous show. They've now came out over Canada Day, just after Canada Day, and said, okay, we have a direction. It's following, the Trans Mountain Pipeline corridor. It's the easiest path for us. It'll reduce reliance on U.S. energy markets. We're going to get it. We can ship it to China. Okay, but we don't. They have. I think they have a partner to build it, which is Trans Mountain Corporation and the Pembina.
Oh, the Pembina Pipeline Group.
Corp.
Yeah.
Yeah.
Okay.
So they're only in it for a small portion. They're in it for like 10%, I think. So they're going to put 10%. They can increase to 20%. So they're going to get some return from it. But if we're 80% into this,
right,
what is the return for Canada? And now this is interesting for Alberta, because I know Alberta, And I love those guys we have on the show. They're interesting guys when they talk about all these separatism ideas, right? Very nice people. I shouldn't say I love them. They're nice people. But you know what? My argument with them all the time is who paid for the capital? And, everyone goes quiet. And I'm like, okay, who put the seed money up to get your pipeline in place? Right? And everyone goes quiet.
Who funded the industry overall for fracking? Who got behind it for LNG?
Exactly.
Yeah, the government had to be there first. They had to pop the first change.
Well, right now there's no one. Right. Now, I can kind of see why there's no one in this case, because quite frankly, this thing's going to take 7 years to build. And that's horrifically
Maybe
bad.
I'm wrong, but the oil market seems to be vaporizing before our eyes for Canada. I mean, we can use it internally, but 7 years from now, we will be out of the game.
Yeah, and there's not many people who are going to ride out a 7-year project to build a pipeline across a nation. So therefore, when this is announced, they're now saying, and this is the argument that was announced. This isn't a expenditure for Canada. It's a capital cost, right? So this is, remember the accounting? Yeah. Remember when we got to the budget where we're going to start to capitalize these items? So this is a capital cost.
And he would move them from one
part of the ledger to the other.
To the other side.
And say, go to the balance sheet versus the income, versus cost and expenditure and revenue.
So this is that language again. Okay, this is not an expenditure. This is a capitalization and a long-term investment.
Fine, agree with the argument.
Then
I'm okay. So
you
then
must have
a return, right? If you're gonna use it as capital, give me a return on capital.
And how visible is this return at servicing our debt?
Right. So this is the Norway, the Equinor concept all over again. Okay, great. You guys are building pipelines. Love it, right? You want to use taxpayer money? Fine, right? The return comes all back to the taxpayer. No, right? It doesn't get sold off. It doesn't get given to anyone else. This is long-term. You know what, Mike? It's funny, and you want to talk, I don't know, for those of you, and I'm doing this FIFA show. I'm going to go on a tangent again.
Oh, sorry. No. Hold on. Is Jim Lang in the room?
I'm doing a FIFA show, right? And I don't know if I brought it, but if I didn't bring it, I'm going to bring it. Those of you, watch it. Oh, I did bring it, quite frankly. Has anyone watched Norway the other night?
Norway's my favorite.
Yeah.
That Viking dude? What's his name? Holland or Erling Holland?
Yes.
That guy's amazing.
Well, guess what? Brazil beats Norway. How many people live in Brazil?
Oh, gosh. I haven't got a clue.
212 million people.
Yeah, I figured it was pretty heavy.
How many people live in Norway?
212 people.
5.6 million.
Yeah, very small country. Yeah.
Right? So Norway beat, right? We just got beat in hockey too, Canada, by the way.
Yeah, I saw that, yeah.
Right? What's the GDP of Brazil?
Oof.
I'll tell you, 2.28 trillion, right? Norway is 530 billion. Right?
Interesting.
So the per capita for Norway per person is $94,000, right? The per capita for Brazil is $10,700, right?
Very small.
So a small nation of people, quite frankly, and I'm using soccer as an example,
That's good.
right?
I get it.
But how it should be mathematically impossible to have a group of people from this nation come out to beat 212 million people in a game that's so rudimentary as soccer, right? We're not talking, this is a game we play with your feet, you kick a ball up and down and you kick it in a net.
Come on, Brazil, I think it's your game.
Well, you know what? A policy decision back in the 1970, 1980, and a direction of a country can change the direction of that country. And we're at that pivotal moment in Canada. So when I'm bringing this up, I started this talking to you about bond offering and foreign investment. And now I'm starting to say, okay, you're looking to do projects, right? You're looking to do defense. You're looking to do pipelines. You're looking to do major projects, right? If all you're going to do is go to the foreign markets and pull in foreign investment in the form of government bonds, is there a benefit here? Is there a benefit to us? Like I'm trying to understand. And then you're going to pay for those bonds with taxes that we're going to pay for.
Not necessarily the revenues derived from.
Right. And then we should get a return then because we covered the bond offering. So I'm okay with the bond. Let me make sure.
I think bonds are cool then.
I'm
because
okay for you to
they're a
borrow
good
money.
vehicle. Yeah.
I wish, quite frankly, you had been like Norway back in the 1970s and 80s. You created a wealth fund. We had the money to actually pay for these pipelines without going to the market, to the public trust. Now,
oh my God, how many people? How much of that that fund will be foreign owned? Have we talked about that yet?
Of which fund?
The new Build Canada fund, or
Oh yeah, cripes. Well, that's 43%. Honestly, it's roughly half again.
roughly the same.
It's roughly the same. But it's interesting. In April, I take a look at the numbers. Provincial government bonds. So on top of the 27.7 billion that we borrowed from other nations, right, or other places, other foreign companies, we also went to market and we had 10.6 billion in provincial bonds. So this isn't even when we talk about Alberta, Ontario, they also issue bonds. So quite frankly, that's what's going on in the marketplace. So if we're going to use taxpayers' money to pay the interest and debt on foreign bonds, I'm fine with that. Let's make sure we understand that, right? I'm not, but then the ownership of that capitalized has to rest with us.
And it has to service
all the ongoing
the
deficits,
debt.
right? So then our deficit should go down. So that chart that I showed where our bond offering is higher than our total debt, quite frankly, should be eroding our debt down to a reasonable amount over time.
You would hope, right, that it's one of many mechanisms that keeps us grinding down our debt.
It does. Now, Mike, can I throw something at you?
Mm-hmm.
We're on it, so let's talk about it. 7 years for a pipeline.
Mm-hmm.
Right? Okay. In a country where we don't have great employment right now, I'm not understanding why that would happen. So I'm sorry. And this is not in the Ontario Alberta announcement. This is in the Prime Minister Alberta announcement for the West Coast pipeline. I'm like 7 years. Like, okay. I went and took a look, and I was, and if I'm wrong, please let me know. I looked at Chinese pipelines, right? And so they're talking between 5 and 10 kilometers per day of pipeline, right?
That's a really remarkable if you think about it, right?
Yeah. So this is interesting because we don't have an announcement of how long it's going to take in Ontario, but quite frankly, and if it's in here, I might have missed it. But quite frankly, if you look at it, if we're doing 330 kilometers, 3,300 kilometers. We do 10 a day. In a year, 330 days, we have a pipeline from Sarnia to Alberta.
Is that a possibility?
Well, it seems like, and in China, what they're doing is with multiple crews. So they have 10 crews working. Now, before the show, I was trying to do the research with the guys in the back, and we were trying to figure out the West Coast pipeline. Well, 7 years, like it's not that far, quite frankly. We're not
really,
talking,
no,
we're talking Alberta over to the coast.
Yeah.
So, we didn't get the exact kilometers, but we're like, okay, well, how can it take 7 years?
Yeah, how can it take 7 years to go all the way to Ontario and then 7 years to go that small distance?
Well, it sounds like well, that's at the Chinese standard with 10 crews.
Right.
So the guys in the back we just don't have skilled trades.
That's it.
I'm said, okay, well then let's go to Norway or let's go to China and let's strike a deal for them to teach us and to give us the technology to build the pipelines. Like this doesn't seem like
I wonder if we will do that. It seems to me like, I saw imagery of the pipeline. It looks like a more of an engineering feat of manufacturing than it does actually laying the pipeline. It looks like a fairly simple process.
Okay, so this is interesting.
I've oversimplified it. My apologies.
No, you're not. But honestly, let's do the math on the bond offering and what the loss of capital of not going faster is. So there has to be someone sitting there saying, okay.
Now, don't kill our bond market, Paul. Holy smokes.
Yeah. No, but there's got to be someone saying, okay, what's the cost benefit breakdown of another crew here? I'm not
No,
an
you're right.
economist. I'm an accountant, but quite frankly, or I was an accountant, sorry, but you know what? I'm sitting there and I'm looking at it and I'm saying, okay, this is a pretty easy intersection of discussion, right? It's going to cost X.
Yep.
I know my interest rate is Y. I know how long it's going to take and what I'm paying in interest. And quite frankly, if I accelerate this, this is what I have to play with to get this up and going faster. Therefore, I can
Right.
go to a third party and pay them to do this.
It
Pay
makes
my bond interest or pay this to go faster, right?
But find the efficiency.
Yeah, two trains, two trains
Also-
one going 60 and one going 50 coming towards each other.
Right.
Where do they meet? This is the question, right? This is that's what we're asking, right?
And the faster we get to the marketplace, the more likely that we will capture enough market to make it worthwhile, or effectively at a time, you point this out, if we can get this done in time to be part of the recovery rebound from a technical recession, if that's what we're in right now,
Yeah.
we desperately need that. We even need just the promise of that.
Well, exactly. The work, the jobs, everything that, listen, this release is a good release, whoever did it. The thing they miss, quite frankly, is where's the revenue going? It says government can become an investor. So we're talking about the Sarnia pipeline now. Okay, great, right? The two governments invest, they do bonds.
So let me ask you something.
Good.
If the
I'm
government
all for
doesn't
that.
invest, if the government does want to have a partnership role in this, it doesn't happen?
Well, right now, no one's stepping up. The only one we have stepping up for a pipeline, is the Pembina guys, and quite frankly, and the Trans Mountain Corp, which want 10% of the deal. I assume they're actually doing that because they get a great return on it and they get the work, right?
Okay, so what's our return? Is it commensurate with what they're going to get? How do we apply that? Can we apply from one to the next? Can we stop taking loans out there? Can we stop putting bonds out there by actually internalizing the revenues of these? Can a portion of it go to service? Can a portion of it go to future projects? And how visible can we have that?
But that's so, it's interesting. 1970, 1980, we had that opportunity, right? We had already invested in the capital to build that structure.
Right.
We sold it. We used that money for whatever. We squandered it off debt that didn't go anywhere. We had no capital return on it. We're in the same position now. We're about to build the same pipelines, the same refinery questions, the same shipping questions. So this is a pivotal moment for us. If we screw this one up again, we're definitely not going to be Norway, making our way through, the World Cup. We're going to remain Canada, right?
Paul, so let me see if I got the math on this right, and you can unravel it for me. If we have 43% ownership overall of a bond that is going toward a capital project here, and see how I called it, a capital project?
Yeah.
And that is out of the bond. And let's say that we can't say that there's a direct correlation because it comes into the government and that is dispersed.
Right.
But let's just say that it is directly related. And we've already given between 10 and 12%, 15% away to other additional partners that I think are Canadian. However, if that partner comes in, that 12% goes to a U.S. partner or a foreign entity, and we've got 43% foreign money in on that project. If something goes wrong with this project or it becomes gangbusters and does well, are we in a shared revenue state with these investors who might just find that what they're getting a return on in the bond is not worthwhile? Or could it bottom out and then we have to settle with these guys?
Well, traditionally, they've been grants. So I know your question is
saying,
traditionally the money has been just an expense.
Right.
So the ownership, this is Prime Minister, Carney's new creation, right?
Yeah.
I'm going to create capital. Okay.
Yeah, but how does he do that? How does he say, okay, I'm going to create capital for these capital projects?
I love it. Right? We should have now, the way he structured it, we should have defense capital. We should have infrastructure capital for pipelines. Our new highways and roads should be.
So you can invest in the project that you want to get behind the most.
Should be tolled. There should be small tolls, right? Like they have in the U.S. And quite frankly, there should be returns on each of them that go to the public trust. I'm all for it. And your summary, Mike, if you do it this way and you actually have foreign investment on the bonds, as long as the revenue comes back to us at the end of the day, I'm more than happy to cover it. Like if I
Well,
want to
that,
go borrow the money abroad,
no, we
right?
need to capitalize that. I see what you're saying.
Now, the risk to that is the foreign volatility and, quite frankly, the market, right?
Right.
Yeah, that's where you're
Because then we might be either with a higher interest rate or having to renegotiate.
yeah. Did we? And the next thing is, did we give the opportunity for Canadians to come into this?
This
And
is
so
a great question.
did we market this really correctly?
No,
No, I don't
because
think so.
when we were young, you talked about CSBs, right?
Yep.
The Canada Savings Bond was something that was marketed. It was on TV. Invest in your country. Invest in your family.
Yeah.
When you buy a bond, it could put somebody to work. Like there was real in your family. There was real marketing efforts to get us. When I was youthful, I felt that I had to buy them, to be honest with you.
Yeah. In Norway, remember we did the wealth fund in Norway?
Yeah.
Where people actually are given the opportunity, aside from what they get from being a citizen, to actually make an investment, an extra investment of free cash flow into the fund.
And
So there are returns built that way also.
People do very well post-retirement in Norway because they've had separate investments and the pension system is strong there.
Exactly.
Yeah.
Exactly. So, what started with just a glance over a coffee kind of turned into a million questions for me that day. And I still have a million questions. And I don't understand, Mike, where we are, why we're not starting to answer these questions. Because we're, great announcements. I'm more than happy. Good job. You've figured out you want to do a pipeline. Good job. Right? Maybe you've figured out some of the red tape, so you won't have indigenous land issues. You won't have environmental issues.
I did hear Scott Moe say, I don't want anything to do with this deal.
Yeah, I did hear that too.
And that he's on the way. He's on the route, by the way.
Yeah, I know.
Yeah.
You might want to clear that up prior to, but regardless, maybe you figured all that out. And by the timelines, it doesn't look like you have, quite frankly. So if you haven't, that's one. The timeline's one issue. The cost is another issue. The capitalization. At this point in time, don't you think we should have a clear picture? So when we do get the stat that we went out and we borrowed more money, we took more money for bonds from the public trust of another country, that
here's how it's coming back.
Yeah, here's how it's coming back, and here's how the ownership, and here's where the project's going into.
It'd be very interesting to me to see if this foreign ownership thing is a big deal. I mean, we've always had foreign ownership in our bonds and foreign investors and foreign companies. But it's amazing how our sovereignty seems to be eroded every time we do something to save the country. We need to stop saving ourselves, and we need to actually be doing something as a nation. I love the idea of people here building a pipeline. I love the idea of people here drilling for more oil and us refining. These are all jobs we need.
Mm-hmm.
It's just to what end? And how do we protect ourselves in the global market when we don't have control of the volatility in places like the U.S.?
But wouldn't you like to be the country that had a wealth fund that was doing the net investment, not receiving the funds?
Yes.
Yeah.
I would really like that.
Me too.
Yeah. You know what that did for Norway? It allowed them to get a giant. They started building giants. I don't know if you've seen their soccer team. Oh, my goodness.
Well, and hockey team. It's interesting, and we're going to do it on another show. But, I actually went to and I'm not going to ruin the show, but I'll give you a taste of it. We actually took a look at the World Cup, and we took a look at, if you bet countries with the GDP per capita, what was your win rate?
Oh, interesting.
Yeah. And it was above 50%.
Oh, that's incredible.
So
okay.
You could have increased your odds if you went with countries that had higher GDPs than other countries.
Where were you? The odds makers needed you.
I tell
There's
you,
still time.
There's
still
lots of time.
Oh.
But you know what? That's another show, and Jim's in trouble at this other show because I've got stats out the wazoo on this thing.
Now, we did not have an argumentative discussion, Paul and I, because we seem to be on the same page. But I will recommend you do go back and take a look at the discussions about FIFA between Paul and Jim Lang. They are quite outstanding, and another one on the books is not a surprise.
Yeah. And can I throw some at you?
Yeah.
If we would have taken that billion to 1.5 billion and actually negotiated a return on it, I would have been more than happy because I've really enjoyed the soccer. But as we wrap up and we're talking, it's interesting. I don't know if you noticed today, but you probably did. From a financial perspective, there's all kinds of stuff on our TVs telling us how the costs were worth it and how happy we are. So we're actually really singing the happy meter on the.
Oh, we paid a lot of
$1
money for happy?
We paid a lot of money for happiness, so everyone's happy. So you should be more than happy that everyone got happy.
Yeah.
Because they watched soccer.
I couldn't be happier that people got happy at our happy money.
Not the fact that, quite frankly, we went 10 times over budget when you originally projected. So forget that. Just be happy that you got to watch it.
This sounds like my garden at home. We just finished doing gardening, and I thought to myself, it cost me nothing to sit and really enjoy that garden. However, the expense of getting that garden,
Oh my goodness.
I can only afford to sit. Paul, thank you so much. I appreciate this.
Thank
Don't
you,
forget to check us out on a daily basis, new shows every day. So subscribe and check us out in your hometown, tplmedia.ca/local. If we're not there yet, we soon will be. And we'll ask you to subscribe to the network. It's free right now. You can give it a try for a month and get access to everything early. Thanks, Paul.
Thanks, Mike.
Looking for reliable and convenient personal safety products? Less Lethal has you covered. As Canada's only authorized Byrna distributor, we provide a range of products for recreation, protection, and security. Explore our Byrna launcher lineup, including the LE, SD, TCR, and Mission 4, designed for different levels of performance and protection needs. We also offer the Banshee personal safety alarm, designed to protect children, women, and vulnerable individuals. Because your safety is our top priority. Shop now at lesslethal.ca.